Hello, John Flynn here from Flynn Real Estate, serving Southern Ontario, here again to give you my professional and honest opinion regarding the 2022 Canadian housing market. So this week, I'm going to get into the CREA statistics that they put out for the month of October and what they mean, and maybe a prediction at the end, or at least my opinion on it. First of all, I'd like to talk about CREA, who they are, and what their main purpose is. So CREA is the Canadian Real Estate Association, and their mission: realtors are at the heart of everything we do. So it's interesting, right? A lot of people think they're like a consumer protection agency, but they're here to represent realtors. So let's see what else they have to say. Encouraging, empowering, and enabling realtors in support of Canadian real estate journeys by, and they list a few things. So pretty interesting that encouraging, empowering, and enabling realtors, right? So let's get into the stats and see what they have to say for the month of October. Canadian home sales edge up from September to October. Hey, this sounds encouraging. The highlights are national home sales were up 1.3% on a month-over-month basis in October. Actually, not seasonally adjusted monthly activity came in 36% below October 2021. The number of newly listed properties edged up 2.2% month over month. The MLS home price index declined by 1.2% month over month and was down 0.8% year over year. The actual, not seasonally adjusted national average sale price posted a 9.9% year over year decline in October. So again, their highlight or their headline, and the first thing on their highlight list was the home sales edging up from September to October. So it seems like a good positive turnaround. And of course, they talk further about this in their release. So here's a graph from the home sales. The red line is the monthly home sales and the 10-year moving average. You can see on the right, that little tick up on the red is actually the home sales increasing. They're increasing from a very low point, or almost the lowest point that I could see them going. But anyway, let's read on. In October, sales across the country increased for the first time since before interest rates started to rise last winter, said Jill O'Dill, chair of CREA. Of course, we've known the demand was there, so it's just a matter of some playing the waiting game as borrowing costs and prices have adjusted. Moving into 2023, sellers and buyers will likely continue coming off the sidelines, but it's a very different market compared to just 1 year ago. As always, for information and guidance about how to navigate the current marketplace, your best bet is to contact your local realtor. Hi, I'm your local realtor. How can I help you? Anyway, so yeah, you know that different opinions between different realtors. So you got to watch when you do contact, make sure that you're getting sound and honest advice and they're working in your best interest, obviously. October provided another month's worth of data suggesting the slowdown in Canadian housing markets is winding up, said Sean Cathcart, CREA's senior economist. Sales actually popped up from September to October, and the decline in prices on a month-to-month basis got smaller for the fourth month in a row. Wow, I think it's over. We've reached the bottom, and we're going back up. Things have turned around now, guys. That's what it seems like here. Let me just see what the next graph says, though. All right, so here's the sales on the right there, October 2022, comparing it to quarters. These are all quarterly averages. And you can see they popped up, but they're still the lowest next to the pandemic quarter. So that's your market turning around right there. Lower than any other quarter since 2017 besides the pandemic. With sales up by a little less than new listings in October, the sales to new listing ratio eased back to 51.6% compared to 52% in September. The long-term average for this measure is 55.1%. So again, sales to new listings ratio got lower, meaning the market was worse, obviously. And here it is on the graph, the red line. You can see it's rock bottom still, even though sales popped up, it's still rock bottom, and months of inventory continues to rise. It's at 3.8 months. We're entering normal territory very shortly. I'm guessing the winter months is going to make it normal. And of course, here's the new listings. They're not at all-time lows here. Looks very average to me, the new listings for October compared to any other quarters or the average of the other quarters. The aggregate composite MLS home price index, HPI, edged down 1.2% on a month-over-month basis in October 2022, the smallest decline since June. The non-seasonally adjusted aggregate composite HPI edged down 0.8% on a year-over-year basis in October, chart B. So they pointed out how the HPI edged down 1.2% or whatever it was. I think, yeah, 1.2% month over month, the smallest decline since June. So that's good news, right? But looking at the chart here, it's the first time since 2019 that it has gone into negative territory, which is a huge story compared to it being the smallest decline since June. And as you can see, there's another two periods in here, obviously 2008, 2009, and 2018 to 2020, where it was negative year over year, monthly year over year, I should say. So yeah, big deal. We're in negative territory. I did call for this in my last couple of videos, CREA stat videos. It is coming, or it was coming, and we finally reached negative territory. It's going to continue into a big negative pattern, and yeah, we'll keep watching it. You're going to see some bigger monthly year-over-year declines soon coming. And here's the chart for the national average price for Canada. The blue line is the HPI, and the actual average price is the red one. Yeah, we're going to see. I'm going to analyze it now with using my own data, or using the data on my own charts. For the month of October, we actually increased $4,000 or 0.6% month over month. We are down 10.1% year over year from October 2021 to now. And we're down 21.1% from the February peak, or $172,000. So I want to do a little further analysis on this. So I put it into a line graph here, and I'm going to look at the head and shoulders pattern I've talked about and try to get a target price based off of this and the tools used when using this pattern. So here is the national average sale price in Canada from CREA in a line chart with the head and shoulders pattern. You can see the left shoulder, the head, and the right shoulder. And the right shoulder is forming the shoulder. It's headed up for the last few months. It's obviously going to start turning down now that the winter's come. And of course, we measure from the neckline up to the head, and it was about $175,000 price increase in that. And of course, usually when we're measuring these, we try to predict or target the same on the downside. So once it breaks past that right shoulder on the downturn, we're targeting 175,000 again, which brings us to a national average price of $465,000, or 43% off the peak from February peak. Now you might think, are you crazy? We're never going to go down to 465,000 or 43% off the peak. But let me just put this into perspective for you. Here is the national average price. And you can see in both 2020, when the pandemic started, we dipped well below the $500,000 average price point to probably 475. And in 2019, almost half the year, or half the months in that year, we were, 450 to 490 or whatever. So it's not that long ago when we've been down at that price point, and we can easily get there again, especially after the aggressive price moves we've had in the last year or two. Again, here on that same chart from CREA, I've drawn in a mean line for some mean reversion analysis. And you can see the mean line puts us at about 550, but we're not just going to go down and touch that line. A lot of times you'll see throughout history there, we go well below the line, and we're going to dip below the mean. And yeah, it'll bring us back to the high fours for sure, if not maybe 500. But like, the odds of us getting there are very high. So yeah, we still have room to move to the downside, and lots of room. So don't be surprised if you see in the next year or two prices dip below that $500,000 price point. And just one more thing I wanted to point out, a 43% decline from the peak is not that unheard of. Actually, it's pretty normal. In the States in 2008, in the 2008 crisis, they went down 33%, as you've heard me say before. And in Ireland, they went down 56% in that same time. So that puts us right in the middle. It could be more, it could go less, but it's still, you're going to see 30% plus, in my opinion. And yeah, we haven't reached it yet. We haven't even reached 25% nationally. So let's keep an eye on that. It's only been 8 months since these price declines have started, right? And a housing correction doesn't happen in just 8 months and start rebounding. Like, that's very rare. 2018 was a little, showed signs of that, but that was just a little downturn from a 0.75% interest rate hike. And of course, they dropped them right back down, and the housing market kind of started to recover. So looking at timeframes, 8 months, that's not enough for a housing correction. This is just the start, right? This is just the start of the bear market or the downturn. And again, if we look at the other crashes and corrections from Ireland and the US, which were again were the big ones in the Western world, Ireland took 5 years from the peak, and you'll see the peak there in the green is the national peak, the blue is Dublin, but you can see it peaked in 07 and it didn't reach the bottom until 5 years later in 2012. And looking at the US, we have a very similar trend. It reached the peak in 06, I think it was mid 06, and it took 5.5 years to reach the bottom in 2012. And this is from the Schiller US National Home Price Index from Fred. Whatever the website. Links are in the description, by the way. So anyone that thinks we've like reached the bottom, or they're looking at CREA reports saying, hey, sales are starting to pick up. Sales might start to pick up, and they probably will, but that doesn't mean prices are going to increase. We've just started this cycle with interest rates as high as they are, and they're going to remain high because unemployment's still very low. We're in this for the long haul. And again, another $150,000 to $175,000 price drop. They're not out of the question. Is it guaranteed? No, nothing's guaranteed, but be prepared based on the data I'm looking at. I just don't see it rebounding anytime soon. And just because sales picked up from the rock bottom and ticked up just the tiniest little bit, don't get too excited, especially going into the winter months. It's going to be a long and cold winter. Anyway, thanks for watching. Don't forget to like and subscribe. Leave me your comments as always. I do read them all. And until next week, I'll see you then.